is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Monday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. And boy, we have a wild one going on this morning. Markets ripping lower in the overnight market session. Futures, NASDAQ 100. S&Ps are down 3.5%. Here are your bars. And we have basically given up almost the entire, I may sneeze. Hold on, I'm going to sneeze. Here we go. I don't know if we got, what's going on, allergies or what? S&Ps 51.91. You are down 184 points, and you can see that we have spiked off of that low too. Things were looking a little bit dire. We were 70 additional points. You were 255 points lower. The day is young. We are just kicking things off. The opening bell in about 23 minutes from right now. But you have the S&Ps down 3.5% on this fear that has ripped global markets right now. NASDAQ 100, we're off by 4.8% right now. The Dow off by 2.5%. The Russell off by 4.2%. We're approaching breaker territory in terms of circuit breakers out there, how low we can go, etc. Yeah, it's a real one. That's the Nikkei. You talk about some moves in the Nikkei, man. We'll get into that in a moment, but that is your Nikkei. You talk about a move down by 7.8%. That is a 3-day run that just sent the Nikkei from 38,000 to 32,000, let alone we just gave up 10,000 points from where we were on July 11th. Pretty remarkable. Bitcoin, you talk about a move as well. The ultimate growth stock to say, down 19% right now. You're down by $12,000. Look at that bar. Look at that bar. All of these equities giving back moves that took months, if not longer. Crude, down 74 pennies. We got a growth scare. Might be a problem with crude. Down by 72 pennies, I said, down a percent, 72.76. Gold contract, down about $40. 24.29. We jump over to the 10-year. And yeah, you're seeing a flight to safety with the 10-year up by 22 ticks right now. And you got everything trading higher in terms of yield. You have, I'm pulling up the yield curve right now. Sorry, one moment. Yeah, so you got the 10-year right now sitting at 3.7%. My goodness, right? You get the 2-year. Here, I'll pull it over. In terms of the action on the yield curve, the 1-year down by 15 basis points. The 2-year down by 13 basis points. The 10-year right now down by 10 basis points, 3.7%. The yield on the 10-year, 3.69 to be exact. Boy, it's a wild one, man. And you talk about a move, you jump over to the VIX. Now that is a real spike for you, man. 65.73. We're sitting at 56.92. Get out of here with this 20 stuff. That is what a spike looks like on a VIX. And to show you, that's a 3-year weekly, folks. That's a 3-year weekly. Look at the spike we're living through right now, and it may have just started. You put things on the monthly, and finally, you can see what a real spike looks like when we get back to COVID. And this may be it. We'll see where the markets go. A lot of chitter chatter about the Fed potentially coming in with an emergency cut. 50 basis points seems to be the trajectory now in September. Yeah, we will see. That to say the least, right? All right, so some of the headlines out there, they speak for themselves. Losses cascade as traders look to the Fed for rescue. Japanese stock indices, 12%, historic sell-off. Yeah, let's pull up the dollar yen, actually. They are going to hike rates in Japan, man. Oops. US dollar. JPY. They're going to race, and boy, the market is reacting. You talk about a pullback. They're going to have a historic shift. You go from 161 to 142. Basically, folks, in the span of, 3 weeks. July 11th, we were above 160. We're trading at 142.63 right now. And, yeah, they're going to hike rates, man. And the market reacting. But guess what? There is a global fear right now that we got a recession coming. You jump to some of the big dogs, right? And how about Apple? Apple's got a double story out there. Buffett is dumping Apple. Now, the equities haven't opened yet, so you're not going to see it on their chart, okay? But Apple's trading at 199 right now. So where are you? You're right back to where we were trading December of 2023 on Apple. Pretty remarkable, right? You get a move in there of 50% higher at one point. Nonetheless, we're right back to the highs we were in December. 199 and change. Yeah, NVIDIA. Go to open down, what's that, $13 now? You're trading at $94 for NVIDIA. And that is the high from March. NVIDIA gives it all back. Pretty interesting, all these stocks. You got Amazon shares at $155. You're down $13. Where's 155 on this chart? Yeah, kind of near the beginning of the year. We kicked off the year at 152.38. So Amazon gives back their move. They were up at 201. As of July 11th, you're going to be trading at 155 for Amazon shares. We jump over to Tesla. Tesla's going to be trading down almost $20. You're trading at 190 for Tesla. Man, Microsoft with the move they were talking about in the den, man. Microsoft trading at 390. Where's 390? Yeah, 390 is the complete, look at that. It's a complete give back in the entire run they had from the prior quarter. When you traded from 390 up to 470 and you give it all back in the span of less than a month. Just mammoth numbers, man. And there was no real reckoning, unless we haven't really heard what's going on yet in terms of what is happening. But you know who sold ahead of this? You know who sold ahead of this and took some cash? Is Warren Buffett. Yeah, how about it? Let's talk about him to kick it off, man. And these two are not related, CNBC with their headlines, all right? Apple's down, everything's down, but guess what? Warren Buffett, yeah, he sold half his stake. And that position, half the stake, more than $75 billion in equities is what he offloaded in the second quarter. He's got $277 billion is what he's got now. And he dumped a little more than $84 billion. Yeah. Yeah, nearly half of the stake. So its holding is now $84.2 billion in the end of the second quarter, suggesting that they offloaded a little more than 49% of that, unloaded more than $75 billion of equities in the period of time. Got to hand it to him, man, especially with what we wake up to today in terms of what may be coming down the line. Because we get some carnage all over the place, man. Let's check out some of the banks this morning. Not going to be as pronounced as the growth-heavy tech stocks, of course, but Bank of America, they're going to be down about $2. He was selling some Bank of America. That was the headline as well out there, right? Last week, JP Morgan, you're down about $7. You're going to open about 192 right now, but right back to where we were basically in the beginning of June with JP Morgan. Let's jump around to some of the airlines. Delta going to open down about $2 right down to $37. Jump over to American, trading down about 60 pennies. All right, folks, stay tuned. This is going to be in Wild Open. We got a lot to talk about. We'll take a look at some of the other stories going on this morning. Stay tuned. We got the S&Ps down by 193 points. That is 3.6% in the red. We got 15 minutes to go until the opening bell. Stay tuned, folks. I'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. Just going through the live feed they have here over at Bloomberg, and it is remarkable some of the numbers you're dealing with when valuations have gotten so lofty. I mean, you just look at NVIDIA alone, $360 billion in market cap going to get wiped off that equity in an instant. That's a 14% hit, let alone if you take the number from the top of NVIDIA, right? 140, you're going to be at 94. That's a 30% hit on NVIDIA shares in the span of about 6 weeks, which was the most valuable company in the world at that time. That's what makes it a kicker, right? This is not some multiple extraordinaire, and it is a multiple extraordinaire, but how'd you get to the most expensive company in the world if you were all predicated on multiples that blow up 30% in the span of 45 days? Maybe it didn't deserve to be at the top on that type of level. Now, everything's getting sold today, okay? They're throwing it all out the window with the bathwater. But yes, NVIDIA down this sounding $360 billion. Whew. Yeah, I mean, some of these. Direction, the SOXL, right, the daily semiconductor 3 times bull, has lured big inflows for 14 days. And the stock's down 34%, not counting today when it's down 23% pre-market. So investors have been trying to find some low in there, and it's going to get a little bit worse. Yeah. And that's the one I wanted to get to. The 2-year yield, now below the 10-year for the first time since July of 2022, as that is an indication. The cuts are coming down the line, folks. And that is when you even have the 10-year sitting at 3.68%. 3.68%. Pretty remarkable. So the NASDAQ 100, this is talking about potentially the forced open in 4 years is what we're looking at. Not a day to be overlooked, man. You know, I was seeing this happen last night. I was seeing them chatting in the den. I saw there was a lot of chatter in the den, more than usual. I said, what's going on in there? What's going on? What's going on with the open? And sure enough, man, I said, what is going on with the open? And yeah, we have an open like we haven't seen potentially in about 4 years. You back it up on the NASDAQ 100. Let's back it up on a monthly. And you're talking about, I mean, we're only, 5 days into August, and look at the bar we have. All right, this bar opened at 19,593, and we're going to be down 2,000 points, and it's 5 days into the month. Might be quite a bar indeed. We'll see where we get to. And look at some of these numbers, folks, all right? Wasn't exactly, hindsight's always 20/20, but this is why you talk about this stuff, to analyze risk rewards. In the A to B, C to D that just completed at 20,623, and you hit 20,900, and within an instant, you're at 17,006, let alone the one in NVIDIA you had going on. And you want to talk about a lofty valuation, man. NVIDIA kicked off this year at $50. You're still at 100% return. You got some crazy multiples been driving this market. Yeah, and what's so remarkable is, we have everything trading lower. Over in Europe right now, okay, you have the DAX down 2.9%. You have the FTSE down 2.8%. You got the CAC roll down 2.3%, okay? Over in Asia, as I mentioned, you have the Nikkei down 12.4%. My goodness. You have the ASX 200, that is down 3.7%, but the Nikkei, right? I pulled it up earlier. Where are you? There you are. Down 9%. Yeah, you talk about a monthly on the Nikkei. Look at that give back. And yeah, there's been a dramatic shift over there in terms of the rotation that has taken place. You jump over to the journal. 2024's most popular trades are unwinding. Well, they shouldn't be too hard to figure out what they are. Look at the dive on yields, just that quick, man. The 2-year and the 10-year. And they have to update that because the 2-year is now below it, I believe. Yeah, that's August 5th. Yeah, so that trend actually accelerates to where you have the 2-year now, remember, below. Here are the rates. Where are we sitting at right now to continue that? The 2-year is at 3.73, and the 10-year, I guess they pulled back a little bit. It was below it, 3.68. Nonetheless, they're both at about 3.7%. And you see on this chart, that brings them both down to this line, down here. Look at how they both drop just like that, man. Yeah, there's a lot of trades that are getting upended today, driven by the growth equities, driven by yields. And now the conversation is going to shift. If this persists, is the Fed going to wait until September? Because that is a long time if they're late to the party. Because think about it. Why is the market reacting? The market's reacting because they feel like the Fed is late to the party and the odds of a recession are high. Okay, high as anyone's guess where you put that, right? They're going to begin cutting. How far do they have to go? How quickly do they have to go? That is going to be driven by the strength of the underlying economy. And if they need to cut, they will cut. Obviously, you have Goolsby out here today saying that the Fed will save the market, and that's not exactly how it works, folks, to put it lightly. They will try and save the market, but if you were late to the party, you can't save the market. That's what happens, right? That is always the big worry, which people were talking about as Chairman Powell has waited. And yeah, we have the markets waking up this morning where all of a sudden the NASDAQ 100, we're getting a trade lower yet again, is down 5.1%. The S&P is off 200-plus points. The Dow off 1,100 points at 38,793. Pretty remarkable, man. And you got the ultimate growth With Bitcoin down by 20% in a day. We were just trading at 70,000, just like that. You're trading at 50,000, 50,455. Pretty remarkable, man. And we're going to be coming back. We got 4.5 minutes until the opening bell. We got about 2 minutes till we go to break. You got Tesla shares. They're going to be down about 187. That's a 10% hit when you open. Pretty remarkable. This is just bonkers all over the place. You can't help, right? NVIDIA trading at a 93 now. Yeah, that's the $14 hit. Remember, NVIDIA has, 25 billion shares outstanding? Yeah, round it up, 25 billion. You're at 2.2 trillion. This company was just at 3.4 trillion, I think. What were you? You were at 140. Yeah. You just lost almost $50. When you were at 140, you're now pushing 90. And you have 25 billion shares outstanding. Every $10 is $25 billion, and you just traded down $50. So over $1 trillion in NVIDIA market cap alone in the span of 4 to 6 weeks. That is real wealth, man. All right, folks, stay tuned. This is going to be an open like none other. Where are we going? We'll find out in 3 minutes when we come back from the opening bell. Stay tuned. We'll be right back.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry Pesavento Friday, July 12th and Friday, July 26th, 9 a.m. to noon Eastern Time for 3 hours of live trading. For this month only, use promo code LarryJuly24 at checkout to save $50 on your first month's subscription. For all the information and to reserve your spot today, visit the front page of TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
All right, welcome back, folks. We got markets open, and we are down in pretty dramatic fashion with the S&Ps opening down 4%. We're trading down 218 points, and it is remarkable when you look at where we were on Thursday. You had quite the acceleration. On Friday, you had an acceleration as well, and then overnight, right, we only opened at 53.27. So, yeah, you were down, okay, but you only opened there. You opened the Cascade was basically constant, and then it just really picked up when you got into European hours. You were trading at 52.76 at 4 in the morning. You get up another 170 points. You hit a low at about 8:30 at 51.20, and we are trading now at 51.54 with the S&Ps down more than 4%. NASDAQ 100, we're down by 5.3%. You got the Dow off 2.8%, 1,122 points in the red, and the Russell right now down by 5.5%. Pretty remarkable. Bitcoin, as I mentioned, pushing about 50,000. We get into some of the commodities. Crude, I mean, everything is in the red here except the VIX. Right? What is that, a VIX future, I think, is what it is, somehow sitting at 32. I think that's a VIX future. Look at that. Everything is red except you go notes and bonds. Well, that puts yields in the red. Okay, that's an inverse relationship there, but that's about it. Every single thing in the red except for volatility and the price of safety, which of course is yields. And the VIX pairing things a bit, but we're sitting at 55.11. We check in on yields this morning. Yeah, the 10-year is still up by about 25. You check in on the dollar index. Dollar trading at 102.25. They're selling everything, that is for sure. And look at that, moving the dollar. 102.26. You rip lower from 104 and change a couple days ago, and you got everything trading lower in this market. We check in on some of the bigger equities out there. You got Apple down $16. 7.2% for Apple. They are catching a little bit of a lift on the open, though, so we'll see if that works. Can this market, and I don't want to use the word save itself because it's not saving itself today, can it pair some of these losses would be a better way to think of things, is how we're going to see how this market reacts. September seems a long time to wait for a cut. When we have the 10-year yield at 3.7%, you get the 2-year now below that for the first time since 2022. And all the chitter chatter is 50 basis points in September. Now, you know, the case is correct that the Fed does not worry about the stock market, in theory, okay? But the problem with that theory is that it worries about the economy. And the market worries about the economy as well. And the market is screaming that the Fed is late to the party and there is a growth scare. Okay, and they're doing it off of the data that the Fed has wanted to listen to. They're just getting a little bit of ahead of where the Fed is, and they're doing it quickly because they're pretty confident that it's coming down the line, and it's going to be interesting to see if the Fed actually waits to September, if they are going to cut by 50. Because if there's two camps here, right? You're going to hear the Fed's not worried about the stock market. They're worried about the economy. The underpinning data is still okay, where they don't have to resort to an inter-meeting cut. But if that's the case, why are we talking about 50 then? Because they haven't even started. So why would you start with 50? Because that seems to believe that you're late to the party, and the market seems to be pricing in 50. And if they're late to the party and they got to go 50, well, maybe they come inter-meeting. And boy, if that ever happens, man, I mean, they are going to bring it, and they have some room to bring it, okay, at 5.5%. That is one of the arguments for why you want to have rates somewhat higher. You can have room for a normalization, and then you have room to stimulate the economy in the event that you have a pullback. But yeah, we will find out where we go, man. Gold down $46. It's getting a short-term time frame. See the bounce. Gold was down to about 24.03. We're trading at 24.23 right now for that gold contract. We check out some of the other equities. Amazon shares, you're down about $12 to $155. We talked about Apple. They're down. Yeah, Apple gets a little bit back. Apple was the strength on Friday, man, in this market, and it seems like they might be as well today, even with Buffett selling, what, $70 billion, $80 billion worth of Apple shares. Pretty remarkable the last quarter. Apple down by 6.5%. Microsoft not bad, only down by 4.5% when you got some of those other equities really getting punished, trading lower. Meta down by about 6%, trading to $458 right now. Tesla down by 9.8%. Yeah, be careful on that one, man. They're the ultimate no-income growth company, Tesla, when you're just telling the story about robots and humanoids and self-driving vehicles that aren't coming for years. They're stocks that may get punished today. Netflix down about 3.7% so far today. All right, pretty remarkable, to say the least. Yeah. So you got the euro extending the gains against the dollar. And why is that, folks? Because we are going to begin cutting dramatically. Anticipation that policy divergence between the Fed and the EC Bank will narrow is supporting the move. Expectations for U.S. monetary easing are now more aggressive than those for Europe. Swaps imply 140 basis points of rate reductions this year. Did you hear that? This year. This year. They're going to fit in 6 cuts compared to 85 basis points for the ECB. The ECB's already lowered 1 quarter point in June. Now let's get some of the new updates they had in here. So the Magnificent Seven down 9%. The worst intraday for the gauge on record in data going back to 2015. They were carrying this market up. And if that's the case, folks, you're going to see it on the other side as well. And you do have circuit breakers if things really start to get a little bit lower, man. Yeah, I mean, look, you got Apple with around, even call it 250 billion, 300 billion in market cap. Nvidia alone, 350 billion. Yeah, you got the bulls out there. This is not the time to panic. You got the bears out there saying, hey, wake up, man. The party's over. We're going to see who wins, the bears or the bulls, as they battle it out. Yeah, right. The opposite is occurring, I'd say. So, got a quote in here from one officer at some advisor alliance saying, usually the weekend's cooler minds prevail. Yeah, not the case this weekend. The exact opposite has happened. Yeah, we talked about the euro. All right. Yeah, just make sure you're protected in where you want to be in the short term and the long term, folks. You know, that's where you want to be, because this market has had quite a run up. And if you're not willing to take the heat for the next year or two, even longer, right, then get out of the kitchen, because markets don't double forever. Okay, you just had an S&P that went from 3,500 to 5,700, right? This year alone, the S&P is still up double digits this year. So we'll put a little bit of context in this when we come back, folks. We got the S&P is trading at 5183 right now. You're at 193 points, off 3.6%. We'll take a look at these markets. We'll be right back.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
All right, welcome back, folks. We get the S&P's down about 199, NASDAQ off 842. You're off by 4.5%. We put things on a 5-minute to see the action. We double right at about 8:30 to the lows we had at about 2 a.m., and then we get a bit of a pop and we get a bit of a pullback. Nobody knows what's going to happen yet today, man. With 12 minutes in the trading day. The VIX giving it up a bit, though. We're back to 46. We were at 65 pre-market. You know, don't be fooled. The danger is not over just yet, folks. You get the S&Ps down by 3.6% to kick off the trading day. And reminder, there hasn't been any dramatic news since Friday. This is just a digestion of everything going on in general, which makes it even more scary, I think, in terms of, is this just the beginning of a complete market sentiment shift change? And if it is, like I was saying coming into that break, taking a look at some of the context of where this market has been. From where we were in October, you are 1,000 points higher, folks. You're 25% higher from where we were in October of last year. You take the high of last year, 46.21. You're trading at 5,100. You're almost 10% above where you were at the highs of last year outside of that run towards the very end of the year you had. You came into 2023 at under 4,000. You're trading at 51.81. You know, recency bias of just stocks going up, I think that's over for right now. Let alone a run like this, okay? Remember the run we've had. Now that is quite a monthly red bar when you get 5 days. Look at this chart. Look at this chart going back to where we were in 2009. Not a lot of red monthly bars like that. Okay, you got a couple in COVID. You take the COVID bars out of there. Yeah, we got a couple that happened during 2022. But I don't know if we've had a 5-day stretch like this outside of COVID potentially. And meanwhile, you look at the run that we had coming into COVID, and then you get a further extension. Yeah, just be careful if you really don't want to take the heat. Because where can this market go, right? Be careful of people telling you exactly where it will go sometimes. Because what you want to be analyzing is the number of scenarios that can play out and then assigning probabilities to those areas. You say, okay, what's a worst case scenario right now? Well, worst case scenario, of course, it can always get bad. There's always going to be tail risks on the outside. But I'm just talking about realistic experiences right now where it could go. You better believe that it can go back and test this high you had from 2022, man. That was a run when equities went from 2,100 to 4,800 in the span of less than 2 years. That wouldn't be outlandish at all. That's almost another 400 points from where we are right now. 4,808. Come back to your B point. You give it all up, right? The NASDAQ 100, okay, just doubled in price in less than 2 years. Right? Just doubled in price in less than 2 years. So, when you talk about that, you got multiple different A to B, C to Ds you could find in here. But just for simple, you're not even at the 382 of that entire move you had from the lows to the highs. I mean, that adds a little bit of important context in terms of where we are, what's possible in this market. That would bring us down to about 17,000. We hit 17,351 in the futures this morning. And as I mentioned, you got here on the NASDAQ 100, a high of 16,766. So, maybe that's an area. You start to get a little bit of resistance, potentially. You come back to the highs we had in 2021 in the NASDAQ 100. That high, 16,767 about in futures over there. And that also correlates to an area of the 382 of the entire move you had from 11,000 up to 21,000. It would just be a 382 retracement, which is pretty remarkable, but that's the type of moves that we've had in this market. And some equities you can't even do that with because the run has been so large, right? I mean, look at NVIDIA. They're the poster boy for it. But where do you even start the run on NVIDIA? Because it's like, I mean, do you really take the start of it back here or something like that? Maybe you just take the start we had in November of 2023. Being conservative, you just gave back 50% of it, of that run that we just had. But really taking, I mean, the run really started back here. Let's see. Look at that. Look where it just hit, the 382. Look at that. So you start this thing at about the run, $10, $11. You push it up to the high at 140. And all we did is come back and test the 382 on NVIDIA. And the markets are popping a little bit here. Today it might save itself a bit, but we have some volatility coming down the line, folks. Because the Fed's got a problem, and the market has woken up to it. And they're not going to be able to fix it if they're late to the party. They can help, and some time can help fix that. But if the worries are real, and they're late, and the damage has been done, then the problem is that even if they cut, there are lag effects on the cutting, just like there are lagged effects on the hiking, right? And so you got S&Ps pairing some of those losses. We're back above 5,200. I mean, you're 85 points off the low, so things were looking a little bit dire. NASDAQ 100. Yeah, how many points did we just trade up near the open? At 8:30, we were trading at 17,353. So you just traded up, 550 points in the NASDAQ 100. The Dow still off 1,000. The Russell, yeah, no real save in the Russell, man. Be careful of those small caps right now. Russell down by 4.7% right now. Dow off by 2.5. You got the NASDAQ 100 off by 3.5 right now, and the S&Ps off by just more than 3%, 52.07. We check out some of the equities. Look at Apple, man. Apple is a flight to quality. With Apple down 4.5%, you were trading at almost 195 coming into the opening bell. You're trading at 210 right now, we'll call it. You jump over to NVIDIA shares. They pair some of those losses as well. You're trading at 99.51. You were almost hitting 90 near the open. So we've had some decent runs here on some of these equities. But we're only 19 minutes into the trading day. That's the other side of things, folks. And it's not just us, right? Everywhere is getting smacked across the world right now as we check back in. In terms of foreign markets right now, you got Asia. Yeah, check Europe. DAX down 3%, FTSE down 3%, CAC roll down 2.6. Yeah. Let's check in on that VIX as it paired some of those losses. 43. Checking on yields. All right, we're pairing things slightly. The 10-year back above 3.7. We're at 3.72 right now. The 10-year yield, we're still up by 14 ticks, but boy, that's about a half a point give back where we were at 8:30. No matter what happens today, folks, we have some interesting times as traders ahead as this market tries to figure out what's going on. NASDAQ 100 off by 3.5%. One more segment, folks. We got some stuff to finish up with. Stay tuned. Be right back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. NASDAQ 100. We're off by 666 points, we'll call it. Down by 3.6%. S&P's right now off by 165. That's 3% right now in terms of the S&P's. NASDAQ 3.6%. The Dow right now 2.5%, and the Russell leading the way down, off almost 5% for the Russell. Bitcoin down 10,000, 52,410 for Bitcoin. You got Ethereum down 22.1%, man. 2354. They get those Ethereum ETFs launched just in time before that market cascades lower. I kid somewhat. Crude off 65 pennies right now, trading at 72.88. You got the gold contract down $37 to 24.33, and that is even in the face of what do you have? You have higher price, lower yields, with the 10-year up by 17 ticks. You were higher, though. You were at 115.03 right now. You got the 2-year. Where are we? Excuse me. Yeah, up by 6 ticks. Quite a run. 103.24. And with a lower yield and growth concerns, you got a weaker dollar out there, with the dollar taking it on the chin. The dollar right now off by 83 pennies at 102.37. And we finish it up with some of those big tech companies. NVIDIA saving itself a bit. You were approaching 100. You're at you're approaching 90. You're at about 100. 99.29 for NVIDIA shares. Apple, Berkshire, Buffett selling a huge stake over the weekend, or over the last quarter, revealed over the weekend. Apple down by 5.4%, but quite a pop on the open for Apple shares. You're trading at 208 right now. You jump over to Amazon. They were pushing 151. You're back to 159, still down about 5%, but they catch a little bit of a pop on the open. Everything getting a little bit of a pop, but man, we're only 26 minutes into the trading day, folks, so be careful out there. The moves, we're going to get some moves in both directions today, continued for the duration. Google shares down by 3.3% right now. You jump over to some of the other chip equities. Look at it. AMD, quite a charge higher, only off 1.7. You can say that today, only off 1.7 for a chip company. Not the case for Intel. Stay away from Intel, down 8.3%. All right, folks. Appreciate you kicking your trading day off right here with me at TFNN. Steve got Basil Chapman coming up next. Steve Rhodes after that. Larry Pesavento, Swim, Tom O'Brien all this afternoon. Have a great Monday, folks. We'll see you tomorrow.
The stock market is a